Okay. I think we got everything going now. I think I did have my mic off. I had the chat off. I think we're all good now. I think we're all good. And I think we've got good internet speed again today. All right, let's just get this trading platform up. Okay, we got the trading platform up. And let's just get into a long right here. All right, and then I'm going to pull up the internet. I've got to get the internet going. Sorry for the delay today, but hopefully we won't have internet issues. Good morning, Larry. Sorry for the hold up today. Just had to do a computer reboot. And I just ended up having to redo everything. Okay, internet scene. Now I've got to put a new internet scene in. Oh, wait, can I just do this? Yeah, there we go. Okay. Let's have a quick look here at the news. So 4 hours ago, during the London session, the Strait of Hormuz will not open. We have not held any negotiations and we will not hold them. Okay, well, it's going to create some volatility for sure. And we've got ADP non-farm employment change in 2 minutes. Oh yeah, I forgot about that. Was in 2 minutes. And core retail sales in 15 minutes or 17 minutes. All right, let's go back to MT5. Just do a quick breakdown while we're waiting for that news to come in. Get rid of all these objects. All right, well, we're getting a pretty good double bottoming type pattern on the daily now. Seen this W come in, which is a really good indication that the euro dollar is going to head back up, especially with all the world events going on. People feel the uncertainty in the US dollar. So we've got a technical reason for the euro dollar to head up. We've got economical reasons for the euro dollar to head up. The past couple of days, we've had a lot of bullish behavior. So that's the way I'm seeing it at the moment. Go down to the 15-minute chart. Here's past couple of days trading. And I'm just going to take one of these that take profit off just for a second in case it just wants to shoot up. And I've got 0.02 lot size. I also need to get my starting balance 9,356.88. All right, there we go. How's it going, Larry? News. Yeah, we just 1 minute ago we had what was it, ADP? Non-farm employment change. That was just a minute ago. And in 13 minutes, we've got core retail sales. So I just want to see where we left off on Monday. Just for a sec. I think where are we at? 400 and okay, we were at 463, $9,463 when we left off. So yesterday, early in the Tokyo session, I took a loss, and then had to recoup a bunch of it. So I'm not fully recuperated from Monday. So I'm in a drawdown. Still trying to fight my way back up here, but made a huge leap forward yesterday, which was really good and really needed. So the goal is to try and get back up to that 500 mark. Well, the goal is to get all the way back up to 1,000,000% in profit, but we don't really worry about that. We just keep following rules and we get what we get. And my goal for the rest of the week is to not hit a stop loss. I think I've just come to the absolute conclusion that the fastest way forward is to not hit a stop loss, whether that's not trading or just trading really slow, and making sure that you don't hit a stop loss. Obviously, there's going to be the odd rogue market that will go and hit them, but for the most part, they should not get hit. And I've hit mine a few too many times recently. So that's my goal, is to make sure that I'm trading and sizing properly as to not hit my stop loss or equity protection. Yeah, so yesterday, not quite sure what was going on in the early part of the morning, but I ended up just creating a hotspot for my computer with my phone, and I ended up trading throughout yesterday's session, and we had a lot of volatility yesterday. So it was kind of good just to focus and not have to explain what I was doing yesterday, because it was so much movement and it was really good. It allowed me to put a good, just gain back a good chunk of profits back into the account. Let's actually just go turn on the history. I was long and short yesterday all through this section. So this was yesterday's New York Open, actually all the way into the afternoon. But you can see I think I placed like 350 trades yesterday. Pushed a lot of trades through the market, like 8 or 9 lots worth of trades. So it was a super heavy trading day, but it was really good. And then we've just got tons of that bullish pressure still coming in right now. You're seeing another doctor today? Is this for your sinus issue? Good afternoon, Vin. So good to have you. I'm really excited to be back here. Kind of missed trading with you guys yesterday, so thanks so much for showing up. Did you talk to Kim? Yeah, I chatted with Kim a bunch last night. She seems to be doing pretty well getting her FTMO account together. Her trading is doing pretty well. We are still in the process of digging this account out of its hole. And oh man, Tuesday was, well, it was Monday night, my Tokyo session of Tuesday. I ended up hitting, I barely stopped out on a move that came all the way back, and it devastated me. My emotions were in rough shape on Monday night, the Tokyo session of Tuesday. Thankfully, yeah, we should have Kim join us. I mean, if she wants to, she knows this, that we're doing this every day. Yeah, Tuesday. And then so yesterday, during that internet problem that I had yesterday, I ended up making my phone a hotspot for my computer so that I could still trade. And I didn't want to attempt to try and stream on it. So I just was able to focus and trade, and I made a nice big chunk back out of my dent from Monday night hitting my stop loss. But the reason I hit my stop loss was I just was a little bit oversized. And so I have to be so careful to not oversize. And so my goal for the rest of this week is to just not hit a stop loss. I've come to the full realization that the fastest way forward is not hitting a stop loss. And if that means not trading, then that's also quick. But trading slow and making sure that I don't oversize is the fastest way. Yeah, Kim was the first person I told about this live trading that I was going to be doing. And then I think she shared it with Larry. And that's how you guys ended up getting in here. Otherwise, man, I'm surprised I haven't been able to find any. Oh, we got Reggie. Reggie's been showing up, which has been good. And then we also had David. He's showed up a couple times. But I've kind of was hoping that the consistency of doing this over and over that we'd have some more people here by now, but I guess not. At least not yet. I need to get a couple more full length YouTube videos posted, I think, to get in the algorithms a little bit better. I keep saying I need to do that, and I gotta really just do it. I've got a bunch of short videos on the channel, and I've got all these lives from every weekday, but I don't have like a regular length YouTube video yet, so I gotta do that. And we are just a couple minutes away from something. Core retail sales. Okay, minute and a half to core retail sales on the US dollar. And I've still got the 50 pip stop losses on, and that is just to be able to withstand any of the really big wild swings that have just been popping up out of nowhere. We could get one with this news, but we've had a lot of unscheduled news events just slam the market and do some pretty wild things. So just still got those 50 pip stop losses on for now. Volatility has been good enough to also use the 3 pip take profits. So we'll just keep those on for now still. "30 seconds to core retail sales. "10 seconds. 5, 4, 3, 2, 1. 0.5%. So it's not really, I mean, it's slightly good for the US dollar, but nothing really to create any, I don't think there's enough to create a big push for the US dollar at the moment with that. Just took one profit there. And then the next high impact news we've got is ISM manufacturing in an hour and a half. All right. How you doing today, Ben? Larry was saying he's going to go see another doctor today. Just starting today. Yesterday, big loss. Oh no. Yeah, that was the start of Tuesday for me. Same thing. Also took that big hit. Is that simulated account or is that a real real money that you're trading there again? All right, just about to bump into another profit. There we go. Got a pretty good bottoming type pattern going on right here. So there's a good chance we'll go up and test these highs, I would think. Let's put a trend line in here. Get rid of that trade history. Hey, David. Good to have you. Thanks a lot for joining in. How are you doing today? Okay, getting ready to take another long in here as that pops down. I'm looking at this spot right in here as that's moving. Right in here as a little support. We can get a little bit stronger push down. I'll grab that long. One more little push. Okay, it's still on right here. And just, there we go. Perfect. So grab that, and then this is going to be a new support level right here. And then we'll put another support level in here, the 158. So if we break that trend line, we should be slow to add positions on the long side until it goes to hit these support points. Find another one here. 156. Right in there. That's right before the stop losses. Hopefully we don't go shooting down there, but we've got to be prepared. So we just took a profit on that bottom one. David, this is the euro dollar. We just always have the euro dollar on here. This is really the only thing that I choose to trade in general anyway. Just on the premise of getting good at one thing. In the past, there was a long time when I traded the euro yen. I traded that for almost a year straight, and then I brought in the dollar yen a little bit. And in the years past, I traded pretty much every currency in the past. I like the pound yen, but for the past while, just trading the euro dollar. Getting good at this. The euro yen, is that the one? Yeah, I used to like that. That's still good. The pound yen, I'm just really trying to specialize and just get really good at one instrument. Because the way that we're trading here, you can just trade on any chart, and so I figure I might as well just get good trading at one instrument. And if we need to, if the euro dollar just disappeared tomorrow, we can just hop onto another liquid pair. But this one is the most liquid, so I just stick with it. All right, we grabbed another profit, and we got one last order sitting there. David, this account is in a drawdown, so we're in drawdown trading mode, which means super light and super slow. It's going to take a little while to dig back out into the green, but it just is what it is, and we're just doing that together. Probably going to take another, I would think maybe by the end of this week we could be back over the 9,500 level, and then we could bump up the position size just a little, and then hopefully the following week we can get back up to the 10K. But yeah, slow smooth. This is a live 10K account though, so we got to be just super careful. Don't do anything silly, and we'll get it back. Unfortunately, last week I just went on a losing streak. Just kept hitting stop losses, and it was partly from oversizing and partly big markets that were just also running, so a bit of both. So my goal this week is to just not hit a stop loss this week. For the rest of the week, that is the attempt. And if the market does just fly into them, that's fine, but I want to make sure that I'm not oversized before hitting my stop losses. Because everything we're doing right here is what got us this live account over the past bunch of weeks. We beat the FTMO challenge, and we got the live 10K account. Hey David, did I send you a copy of my trading plan? I don't think I did. I'm gonna just leave my email in here, and if you want to, shoot me an email and I'll send it over to you. I'm currently on a FTMO free trial, getting used to the platform. Do you have any suggestions on DD? Cut risk only. Okay, we've got a market running in favor, so I'm gonna have to just pay attention here for a second. We're gonna secure this one trade because I left it open. So that one's a free trade now. Coming back down, it tapped it out. Lots of volatility. Darn. Oh, it tapped that trade out right before it started to run again. All right, on the pullbacks, we'll just go long. I don't want to, like, this is my favorite trading, so I don't really want to miss it. Just got to be careful of the spreads. I think we had a pretty good spread jump there. So on all the pullbacks, we're just going to do everything at matching the speed of the market. Okay, here's a good level to trade off of. Pause, there we go. And rather than stacking exactly the way I usually do, I'm just going to go a little bit lighter. Just because I don't want to accidentally overdo it. Unless it slows down a bunch. And then we'll start marking out levels. But when it's moving super fast, sometimes it's like, it's hard to follow the levels and put new levels in and know exactly where you're going to trade. And so I know as long as, if I enter in just slowly, that I'm undersizing the way that I enter in. So that's just all I'm doing right now. We want to be able to have this market run all the way down against us and then be able to wobble maneuver out of it, which we can. So I'll add another one here. Oops. So I've just been adding layers of one rather than increasing my size. We'll increase the size if it drops back down into these levels. Okay, there's a profit. Not sure what's going on. I wonder if somebody said something. and it's already slowing down quite a bit. So just gonna have a look and see if that something got posted on Forex Factory. Yep, 3 minutes ago, Iran's new regime president has just asked the United States of America for a ceasefire. We will consider when Hormuz Strait is open. So Trump is making the market move again. Okay, yeah. So back to what David was saying. Do you have any suggestions on the DD? Is that drawdown? Do you cut risk only, or do you adjust to? Okay, yeah. So at the moment, while in the drawdown, just downsize the lot size. Otherwise, everything else stays the exact same. So we're just at a smaller lot size for now until we bring the account back up, and we'll just slowly increase the lot size back up as we go. So this method of trading is just super good for volatility. So if we can just, it seems like this market has already slowed down quite a bit. Unfortunately, that was uh, kind of short-lived, really high energy. I don't know if it's going to come back, but just all that movement back and forth is super good for this type of trading. The key is just not oversizing. So the lot size, we just adjusted by the account size. So I think the answer to what you're asking is yes, but like as the account either grows or shrinks, then the allot size is adjusted to that. Otherwise, yeah, it's not like the way position sizing is working with this more so is like how you're stacking. So in this case, here, let me just back out for a sec. This is like heavily based on price cycles for how we measure risk. So I've currently got 50 pip stop losses on right now and 3 pip take profits. The reason for that is because I'm measuring most of the bigger price cycles are 50 to 60 pips. Like if we go to the 15-minute chart, and we take some of the bigger ones, or even the surprise ones. So this one right here, that was 42 pips. So that 50 pip stop loss keeps us out of a lot of these. This run was 47 pips. Yesterday's big push, actually, there was enough room to wobble in and out. There was enough volatility in here that you could make it work. But if there wasn't, this would have been an 82 pip run. It didn't go straight up. So the 50 pips just keeps us out of most of these big price cycles that we're seeing. Like here's another one. What was this one? That was a news spike of 47 pips. And so yeah, that price cycle, we allocate the stacking method inside that 50 pip size. And so that's like how the position sizing ends up being adjusted, because we don't take just one trade. It's a bunch of trades all together to create the position size. And so if you send me your email, or shoot me an email, and I'll send you over my, here, I'll show you what I'm talking about. It's this. Hold on, I need to see what I'm doing. This is the way we stack. And so when the market is pulling back, we're assuming that we're in the direction of the trend. And then as that market pulls back, we're slowly increasing the size of the stacks. And then the very bottom of that pyramid is the stop losses. And the stop losses, super important. There has to be a bottom. It's not a martingale technique or strategy. It is to continually be able to readjust and take profits and losses so that you can take the losses when the market comes back to you, rather than taking losses as the market is going away from you. And that ends up taking much cheaper losses, and it allows you to not have to hit stop losses most of the time. So I can send that over to you so you know, have a better idea, because it's pretty hard to explain. Yeah, you figure your size on each individual trade. Is that a bad thing when doing the challenges? No, that is definitely how you want to do it. Like the FTMO challenge. No, you're doing it just right, man. You're absolutely doing it right. It's just this type of trading is just a little bit different. And if you get that diagram in your hands, it's a lot easier to explain with that image. All right, let's see what's going on over here. So now we've got a pretty good pullback. Gonna grab another buy. See if we can squeeze. I'm gonna get 2 buys in here. Oops. What the heck is going on? Okay, so now as we start gaining some profits, we've got to start getting rid of those upper positions, because my rule is when you start getting to the 3rd level and higher away, you've got to start taking losses on the upper positions. And so, relatively speaking, we're still really light on the whole overall position size. Right now, we're at a $12 drawdown. We could take this probably all the way down to 175 or 80, 175 or $180 drawdown would be a 2% risk, and that would be approximately where we would hit the stop loss as well. If we're to stack this and size it properly, we would hit that stop loss. That would also be around a 2% loss. And so we're nowhere near that at all. So we've got lots of operating flexibility. And that's kind of like, that's the way I like it. I like to just be able to take the losses in my control when I gain some profits, and it's a cheaper way of losing. I just personally like it. I find it to be a more effective way to lose, but you have to still lose. I don't know another way around trading other than to lose properly and professionally. But you still have to take the losses. So as we can gather up some profits, we'll just start chipping away at these upper positions for losses. You sent an email? Okay, let me shoot you over that thing so that you can get it. While this market is just sitting there. All right, David just sent you over that document. And this is very similar to the way that Sean trades with the APRA fund. It's maybe just slightly adjusted for my own personal use, because I don't think anybody trades exactly the same way. We're all looking at the markets through a different lens, but it is pretty close to what he does. Okay, the energy just really slowed down. I'm gonna grab another couple buys on this level right in here. And then probably get one more just layer of two. I'm really spreading the layer sizing out here, just to be careful not to oversize. So if we can get any upward leg through a couple of these orders, we'll just remove some of the losses up top and just slowly chip away at some of those losses. Unless, I mean, we could get another big spike come in one way or the other. Be nice if it went up, but the moment we have a topping pattern, I don't think the market is done going up, but technically when we get those topping patterns, generally speaking, we find a leg downward, a pullback in the trend. So we could still see that come in, and I don't want to be oversized for if and when that market pulls back. But right at the moment, as we come down into this spot, there's a lot of trend, a lot of bulls behind this area. So I expect that we're going to see some upward legs come in here in the next probably, oh, maybe in the next 25 minutes when the stock market opens and we get some more volatility again. We might see another up leg. But this is heavily based on volatility trading. If you size properly, you can just keep tapping your take profits through the volatility and slowly gain profits, and that's what we want. The 3 pips take profits right now are based off of the mini price cycles that we're seeing in the markets. So if we measure, let's just take these pivot to pivot here. We've got 5 pips, almost a 6 pip consolidation. So our 3 pips is likely to hit in there. Just took a couple little profits there. We'll wait till we hit this layer before we take losses up here, because the layer sizing is all undersized right now. So we've slowed everything down so much, we can wait for the market to come back a little bit more before taking losses. Yeah, David, I am very happy to help. Hopefully that does help. So if we just go back and measure some of these smaller price cycles, there's a 6.5 pip price cycle. And so if we're inside that, we want to be like half of those price cycles in order to hit our targets over and over. So it's like a 6 pip price cycle, having a 3 pip take profit. We actually maybe should even bump it down to 2 in these price cycles. Here's another price cycle. That one is 4.5 pips. This one is 6.5 pips. This candle here is 6 pips. So yeah, we can still squeeze 3 pips, but even 2 pips might be a little bit better to hit them a little bit more consistently. But in general, the 3 pips has been good with these higher volatility markets. So we'll just stick with the 3 pips for now. But once the volatility drops back off, then we would we would size down the stop losses back down to a 35 pip stop loss, and then a 2 pip take profit. So we've just expanded our variables because the market has expanded, just with all the things that are going on right now around the world, the higher volatility. So generally we would have 35 pip stop loss and 2 pip take profit. But you can adjust it to however you want. You can trade the hour chart and have, 100 pip stop losses and 10 pip take profits. And that puts you in a really high probability spot. Like you could go a long time without hitting a stop loss if you had those type of variables. It's just a matter of your personality and how you want to set up your day and set up your trading business. Okay, you can see this candle, it's moving around quite a bit. That's an indication that people are stepping back into the market, so we could see a bigger move come in here in the next minute or two. David, did you end up getting that document? Did it come through to you? Okay, so we're just hitting some profits. And now we've run, let's check this price cycle. That's now been 8 pips, so let's take a loss on the top and get rid of that one. So we took probably five or 6 trades at 60 cents. So we took a $2.40 loss, but we made up for it in the other trades. And we took the loss while the market was coming back to us. So now we're super light again in our position size, so we can just let the market run up and hit some more profits, or if it pulls back, we can just go long again, and we'll just keep on doing the process over and over. Just kind of like a machine. It's like a pip production. If this pops up a good amount, again, I would short it too. And we could do the exact inverse of the buying that we've been doing. We could flip the whole system and do the inverse and trade the other side, and then you're even hedged at the same time. So it gets a little bit more complicated when you do that, but when you get good at trading one side, you can actually trade both sides and put yourself in a really high probability state. And while being in that hedged state, you're also at a low risk too. So let's just stay on the one side for now and just practice the one way. But it can be really, you can double up your trading volume and keep your risk low at the same time, which is a powerful position. Yeah, be sure to be in the meeting, the Hive meeting on this Thursday. Thanks, Larry. So now on this bullish leg from pivot low to where we are now, we're at 13 pips or so. So it's a perfect time for it to pull back. So we could go short, which I just don't feel super comfortable doing that right now because the magnitude of this bullish move over the last couple days. So when it pulls back, we can just get into some more buys. You can just use some of these previous lines back here and place them here as new data rolls in. Nice, you got it. Good. It's a good way to trade when you learn how to do it. You learn how to do it well, and you stay to the lighter side of things. It's a high probability trading methodology. Just the biggest trick, the biggest part, the hardest part to operating it is just so easy to oversize because it's just you can be adding a lot of clicks on your layers, and so it like kind of like teaches your body that you're going to click a lot, and so you have to be really in good control, and it's good to mark out your layers. Like I'm drawing these lines out so I know where I'm going to trade and stuff like that, because it's very easy to just over click and over trade and find yourself over leveraged. That's probably the hardest part, but if you can get over that part, then the method is super powerful. Very high probability. Okay, let's take one trade here. See if we can squeeze some out of this little consolidation. Then we'll take another one here, and then we'll take two down here again. And so the stacking is not, I'm not doing it perfectly to what the document says, but the premise is to stack in a way that you're always like one price cycle away from getting back to break even. Okay, we just took another profit there. So you're always heaviest, if you're buying the market, you're always heaviest at the bottom, so that when it pops up in your favor, you're very close to break even again. With every price cycle, you're always staying really close to break even or making money. That is the premise of the wobble technique and that document that I sent you. So oftentimes I don't end up stacking it exactly as the numbers are in the document, but close to it. Because sometimes you got to operate quick, and then you just have to adapt. Like if you oversize on one layer, you've always got the opportunity to just like not trade the next layer. Like you can just let the market float. If you accidentally oversize on one layer a little bit, you can just let the market just float around a little bit, and then you can take the following layer, like maybe two layers away. You can skip a layer if you need to, if you oversize too soon. And that's something I end up doing occasionally. So David, I know you've got your own way of trading, and that's fantastic. Are you making it work well for yourself? Do you find that you've got a good system now? I know you've been at this a long time too, so just curious as to how your system's going for you. Because if you've got something that's working for you, I wouldn't really recommend changing at all. Like you can watch to absorb more, but if you've got something that's working, then it might not be like you wouldn't want to just switch up what you're doing in live conditions. Okay, if we can get one more little push lower, I'm going to grab another long right here. And then that target fits inside that consolidation here again. Just almost hit that target again. Not quite. With a large spread of that stop loss, do you keep account risk the same? And then you would divide that by the amount of entries. Yeah, that sounds pretty good there. So you want to essentially put that whole pyramid and stack it up on top of your stop loss. So we've got a 50 pip stop loss. I'm kind of doing rough math right now, so I know that like right on top of the stop loss, if the market ran all the way down to that, I would want to put my last layer, which on the document it says 16. So we've got a layer of 1, 2, 4, 8, 16. Depending on your account size, you could put another layer in and do 32, or it depends on how you want to do it. So you would pre-plan the whole setup to stack on top of your stop loss, and you would divide everything up by what you want to risk. So I'm risking 2%, and so I know if I stack everything approximately and get that last layer at 16 positions at the bottom, if I stack that whole pyramid on top of my stop loss, it will roughly be about 2%. Just because I've done it a bunch of times. In the same way, if we're running with 35 pip stop losses, the whole system would just be a little bit more shrunk together. And so you could always expand or shrink that based on the level of volatility. So if you're running smaller stop losses, you can just cram the whole thing together tighter, putting yourself at a heavier sizing. Or if you want to expand the whole thing, you do lighter sizing the whole way. I hope that it kind of helps. It's a good question to have answered properly. I feel like my system is very solid. I'm not considering strategy hopping, just interested in another session. Strategies to possibly add to my repertoire. I'd like to trade at least 2 sessions a day. That's perfect. Man, that's really good. You got exactly the right state of mind. It's always good to keep learning and growing, and you're doing that, but you're good with your system too. That's perfect. You can, once you lock in on one system, you can still practice and learn another one like this one. That's really good. Yeah, you're right on point, man. And then Larry's just saying that Todd's saying a lot in class today. Just be sure to go listen to that. Okay. Yeah, I can go watch the recording and see what he's saying today. David, does that make sense? Am I doing an okay job explaining that? I know that that is a little bit complicated. I know that that is the struggle with trying to communicate how to manage the risk. And that's something that I've taken a lot of time to try and understand. Like when Sean has taught that, it's been something that I've definitely struggled to understand. And so drawing this diagram out and basing your risk based on your stop loss is how you do it, or how I do it anyway. I've been trading the buy open and things have been steady. Oh, the New York Open, not where I would like my risk to reward, but it's steady progress. Oh, that's good. Steady progress is really good. Okay, so now I'll just get into another trade here on this level. And we're almost at the stock market open. The main thing that I keep in mind for while I'm trading this way is I always know where my stop loss is and then adjust to putting my last stack. I say to myself, can I put 16 trades 45 pips away from here and be within my risk tolerance of 2% loss? That's basically what I keep in the back of my mind while I'm trading this way. I want to be able to put a nice big stack at the very bottom and be able to get myself out of trouble, knowing that on average that stop loss is not going to get hit. So if I'm placing that last layer in that 40 to 45 pips range and I'm getting a nice big stack on there, I know that I'll be able to come out of all my losses really quickly. But still knowing 100% if that first stop loss gets hit, that the whole system just shuts down. I've seen Sean trade it where he just like allows stop losses to get hit and he doesn't necessarily close everything. I know he does it a little bit on his own way, and I think it's based on the situation. But as long as you stay really close to the system and just trade it lighter, like if you're ever uncertain about how much you're risking, just trade less than trading more and you'll manage your way through it. It puts you in such a high probability state that like you can make some little mistakes and just get away from it. And that's like one of the downsides of the discipline training and trading. But if you understand that you're managing risk in real time and you're trading to the light side. Like for me, my hard stop, which I don't change, is a 2% loss. That doesn't change. Doesn't matter how big the market is, the volatility or the price cycles. My absolute bottom on any given setup is a 2% loss. And I always keep it that way. And for me, my gains are always 2 and 3 pips. I always know that I can just keep cycling through 2 and 3 pip gains and also taking my losses in my control. So those are often 5, 6, 8 pips. Occasionally they end up in the 15 to 20 pip range, but that doesn't happen very often. So, and then I've got lots of 2 and 3 pip gains on those bottom layers when we hit those layers. So it's a lot of flexibility and a lot of high probability. And I'm still learning it for myself too. Still learning how to make it work. All right, that was a good leg in favor. Just clearing out the whole system for profits. So we're up to 363. Where did we start off today? We started at 56. 356 is where we started. We're at 363. So we haven't quite made 10 bucks yet. It's the downside of being in the drawdown, is it's just slow. When this account gets back up to 10K, actually when it gets back up to 9,800, I'll bump it back up to 0.05s. So once we clear the 9,500 mark, I'm going to bump this back up to 0.03 or 0.03. Once we get to 9,500, once we get to 9,600, bump it up to 0.04. And then once we get to 9,800, we'll be back up to 0.05 lot size. And then we'll be, that for me is what I consider normal trading. And just had to, as I took those losses, we had to make sure that we don't lose this account. So just downsize and slow it down. All right, this market is running. I kind of wish I left one trade on to run. Occasionally I'll just leave one without a take profit if you've got a strong trend. So right up at a previous pivot high. Let's just go back and see. Okay, actually on the 15-minute chart, we're actually at a lot of support over here, or sorry, overhead resistance. Let's measure. We've got all the way up to here before it's in the clear. So if we were to measure from here all the way up to that pivot, we're at 50 pips. So we can short right here. We're going to put a short in. And that stop loss is just outside of that pivot. And we've got all these other resistance points that should allow us some to get out of our trades before hitting that stop loss. So now we'll trade the short. We'll trade both sides. Go back down to the 1 minute. So now I'm confident that there's lots of reasons overhead for this to stop at some point. And then if it runs right into the stop loss, so be it. That's fine. But now that 1 minute price cycle, we've run up 16 pips. So it's a really good spot for it to turn around a little before continuing. And if it doesn't stop there, we'll find lots of other opportunities just up above this spot. But we should be fine. We should have there should be a lot of good opportunities for making money on the short side, as well as if it drops down a bunch, we can trade back onto the long side. Thanks for coming in, Vin. Always good to have you. We'll see you tomorrow. David, how do you measure your stop loss? So that is based on the current price cycles. So I look at the last maybe 6 or 7 runs and then take the maximum price cycle of those runs and I match my stop loss to that, assuming I got in at the worst spot. And then can I survive through that price cycle? So that's why we've got the 50 pip stop losses on, because I measured a bunch of the last big legs and they're around 40, 50 pips. And so on average, we should be fine. We shouldn't hit that stop loss. Just barely missed that take profit. So I'm getting ready. If this thing shoots up, I'll be getting ready to add another short. And I only want a short as it's pushing up. And in this case, we've got this wick low right there. So I'm just going to shimmy this little take profit up a little bit. And so if it tests that low, I want to get out of that trade. I don't want to have it break that low in order to get the profit. So it'll be a little bit less than 3 pips, but I'd rather that to increase the probability. And now if this market shoots down, definitely we'll take buys. So there's so much bullish pressure behind it. If there's an aggressive push down, there should be a lot of buyers behind it to prop it back up. There we go. There's the target hit. And we're right on that support point. See how it's bouncing right on it. It might blow past. Okay, would have gone past, but it was high probability to take the profit before that point. So now we've got that. We can go long. And that target comes in under all those body lows. So that's perfect target. And put some more lines in this side. Got a point here. We've got a body here. We've got a body here. So that's a good spot. So go one trade here, one trade here, and we'll start building up size a little bit down here. Actually, you know what? Let's just gonna remove all the objects. We'll just start over. It's really good to just, okay, perfect. I really want to get into this. This is a really strong position, so I'm gonna remove a couple of these, take profits. This is a really strong push against the trend. So as that goes back up, I'm going to remove that stop. I'm going to take that loss there. There's a win, and take that. And we're going to take some higher wins right there. Just like that. So that was a nice little setup. As it pushes down, we'll do that again. This time I'm going to leave the targets on. That was a super quick trade, but it worked out really well. So now I think we made 10 bucks. We were at 356, now we're at 366. Okay, another profit target hit. Okay, let's just go for another short here. See if we can trade both sides again. I'm taking the short because we've got a pretty strong topping pattern. We had one top over here, and then we've got a second top starting to come in here. So it could shoot all the way back up, but if that's the case, we'll just maneuver out of it. Not concerned at all. And then it allows us to play lightly on both sides of the market. If we can get another strong push down, we'll just buy it as well. And then also just move this take profit up just a little because I want it to be out before those bodies. I just want to be able to test those bodies and get my profit. And also get ready on the buy button in case it does that. Getting ready on the sell if it bumps up into these lines. I'm going to try get that sell in here. And then if it comes back down, I'm going to just take the profits here. I want to just get out of that trade. So if that gets to a 0 on that, I'll just take both profits. I've got my finger on the close button over down here. So there's the 0. I'll just take that profit and we'll go long. Trying to reset and get myself more in sync with the location of the market. Like it was starting to grind upward a little bit. And so I wanted to get out of those profits before having to get the market to come all the way back down. It's starting to create some higher lows. So that's why I wanted to get out of the short quick. We should be trading live within the next 2 weeks. Nice. That would be great. Then we can just add our TOTS prop firm to the trading that we're doing. I can show you guys how I'm connecting all my accounts using Traders Connect. And then you can hook up as many prop firm accounts as you want, all to the one trading platform. Okay, this pushes down again. I'm going to get into another buy. Somewhere right in here. This is good volatility. This consolidation is offering up some good opportunities. I missed that one to go long, but we'll get the next one. We're going to pivot higher, and we got another pivot higher now. I got a feeling we're going to keep pressing up back up into these highs. But if we do that, we can still take some shorts up here. Yeah, Larry, that'd be really good. So they can get that prop firm operational. Okay, just took another profit. And if it jumps up a bunch, we can short it. I don't really want to short it right where it's at. I'd rather be more extended to short it. I'd rather another bigger push down again, and then I'd go long. That last one that we had was a really good one. This one was a really good setup because it pushed down so quickly into that big trend. So that was I over allocated a little bit on that one. But if it kept running through the trend, I would have had to stop my sizing, and then I'd have to skip a layer or two because I oversized on one spot. But I oversized because it was a really good setup. Okay, so if this pushes down, we'll get into another buy. Oh, actually, we're almost at the top of the hour here. Didn't realize how the time. So 11 minutes ago when we had that push down, that was another little news event. Iran is saying the strait won't reopen based on Trump's absurd displays. So that's what that spike was. So I think we're just we'll end the session here today. We'll do the math and see how much we made, and then we'll finish it up. So we're at, just get my calculator out. We're at 9,367.79. And then we'll subtract that by the starting balance, which was 9,356.88, which equals $10.91. And then we'll divide that by 9,356.88 times 100. That equals, oh, wait a sec. I think I just did something wrong. I got to redo that. $10.91 divided by $9,356.88 times 100. There we go. Equals 0.12.